Let's talk about what a target date fund is and why you would use it. If you were going to build your own investment portfolio from scratch, you would have to go in and individually select the stocks and bonds that you want to invest in. You would need to make sure that you have the right proportion of stocks to bonds, as well as that you were choosing investments that were going to perform well over time. That requires a lot of research, and it might not be the route you want to go to spend that much time doing it. This is why companies offer things called target date funds. Let me show you a graph that'll help explain what they are. A target date fund is a collection of different investments that someone else has built for you. There is a fund manager that has already chosen the stocks and bonds to invest in. You just purchase the fund, and then they choose the actual underlying investments. Let's look at this graph here. Target date funds are designed with a specific date in mind of when you will pull out the money. So, for example, let's say you want to retire in the year 2060. If you were to purchase a target date fund for the year 2060, today it would be relatively aggressive in terms of the type of stocks and bonds that the fund manager invests in. However, it would become increasingly conservative over time. This is to help protect your investment so that you don't lose money as you get closer to your retirement date. You can see here in the graph how it works. Let's say you purchase the fund around here. Maybe you're age 30, and you have 30 years that you're planning to own this fund before you withdraw the money when you turn 60 years old. So right here at age 30, most of the portfolio is going to be made up of stocks with a little bit of bonds. This is because stocks tend to be more volatile, meaning they move up and down in price more rapidly, as well as in larger swings than bonds. Bonds are usually more stable. However, stocks tend to get higher returns over time. So at the beginning, where you have a 30-year time horizon, you can afford for your portfolio value to go up and down with the stock market. As you get older, you're getting closer to the time when you're going to want to withdraw the money. And you don't want the stock market to crash right before you need the money in retirement. That's why target date funds are designed to change their asset allocation over time. The older you get, the more bonds there will be in the fund and the less stocks. On this next slide, we'll talk about how to know if a target date fund is right for you.